Welcome, everyone. Thank you very much for joining us. In this session, we'll be discussing considerations for Americans moving to and living in Portugal. Please note the webinar is for informational purposes only. It is not intended to offer advice or guidance on legal, tax, or investment matters. So just to briefly introduce our experts, Anna Sosdian is the co-founder of Start Abroad, a concierge international relocation service. Anna splits her time between Costa Rica and Portugal. Anna's going to talk about residency visas, banking in Portugal, and finding a home. Shane Clark is president and co-founder of Euro American Financial Advisors, which specializes in financial advice and investment management for Americans living in Europe. Shane will be discussing financial planning considerations for Americans moving to Portugal. Vincenzo Villamina, CPA, is founder and CEO of Online Taxman, a leading provider of US tax services for overseas Americans. Vincenzo has been living abroad and helping US expats stay compliant and tax optimized for over 20 years. Marta Duarte Silva is a tax partner at Anderson, Portugal, which is part of Anderson Global. She has a Master of Laws specializing in international business law and specializes in Portuguese taxes for private international clients and family offices. Okay, let's jump in. Anna, would you like to start?
Yeah, sure. Thank you so much, Hugo. And thank you to everyone who's joining us today. So I am Anna. I'm the co-founder of Start Abroad. And just to mention quickly a little bit about who we are, we're a concierge relocation service. We assist Americans and others making the move to Portugal from the perspective of the entire relocation process. So from getting the visa to finding your new home to making sure your utilities are working when you arrive. So these are our topics that I get to talk to us about here on the screen. So of course, the first thing that I want to touch on are the visa options that are most popular among Americans relocating to Portugal, and then how to decide which one might be right for you. And to quickly mention, this is not a comprehensive list of visas, but the ones that are most popular for folks. So first up, the D7 visa. This is a passive income visa. It's the visa of choice for retirees. Next, the digital nomad visa, which you can qualify for with remote work, self-employment, or business ownership. And finally, the golden visa, residency through investment. So talking about the D7 first. So this is really the visa for retirees or those with other types of passive income, things like Social Security, rental income, dividends. One important note, a question we often get is that you can qualify even if you are pre-retirement age, if you're looking forward to a future pension, if you have enough savings to live off of in the meantime until you can draw upon retirement. The income requirement for this visa is very approachable. It's the Portuguese minimum wage, which is for this year, 870 euro per month. That's the requirement for one person. And then for dependents, you have to add 50% of that for an adult or 30% for each child. And then when it comes to what is your pathway to residency, permanent residency, and citizenship. So this is a visa that is temporary residency for 2 years. You can renew for an additional 3 years. And then at the 5-year mark, at the moment, you're eligible for permanent residency and citizenship. We were actually just chatting before this about how there is a bill that was recently introduced in Portugal, which may change this and extend that timeline for citizenship. So something to keep an eye on. You do have the ability to work from Portugal in this visa. And then there is a minimum stay requirement, which is you must be in Portugal for 16 out of 24 months and spend no more than 6 months consecutively out of the country for that first period. I will also mention in terms of timeline, so we're talking about Americans, the current timeline for approval for the D7 visa, it's approximately 3 to 4 months right now after you submit all of your paperwork. And you do have to apply from your current country of residence. Okay, let's talk now about the next one that's most popular, which is the digital nomad visa. Very similar actually in a lot of ways to the D7, except for the type of income that you're showing to qualify. So it's not passive income, it's employment income. And it's really good for remote employees, business owners, freelancers, contractors. The main requirement I want to mention, other than the financial, that sometimes trips people up, is that you do have to provide a letter from an employer or a client. Let's say if you're a business owner, it might be from a board member, a co-founder, something like this, showing that you can continue your work from within Portugal. The income requirement is also higher, so it is 4 times the minimum wage. For this year, that comes out to 3,480 euro per month. And again, you have to add some for additional dependents. And we do see that change usually every year as the minimum wage adjusts. In terms of residency path, the stay requirements is the same as the D7 visa. Approval timelines right now for the digital nomad visa, we are seeing them a little bit faster than the D7 when it comes to American applicants. All right, and then I want to touch on the golden visa because we do get a lot of questions about this, which is a residency by investment program for non-EU citizens. The thing that's really compelling or interesting about this visa is the stay requirement is really a lot less than the D7 and the digital nomad visa. So it's only 7 days a year. So it's really best for those who want that route to EU residency and citizenship without relocating full-time. At the moment, in terms of investment requirements, you're looking at, for most people, at least 500,000 euro in qualifying funds, or less common, 250,000 or more in a donation to the arts or heritage preservation. Important to note that real estate no longer qualifies. Also, very important to note that the timeline for approval for this visa is also considerably longer at the moment. So it's, we're looking at 18 to 24 months usually. And again, the pathway for residency may be extended. At the moment, it is 5 years. All right. So excited to hopefully field some questions about visas later if anybody has any, but I want to change topics now and go over to bank accounts. So just a couple things to be aware of when it comes to opening a bank account in Portugal. It is required for the visa and the residency process. And there's a lot of paperwork to pull together for opening the bank account. I sometimes like to tell our clients, if you are not yet a holder of a valid visa and you are applying remotely for a bank account, sometimes I think the bank account process is just as comprehensive a process as getting the visa itself. So to be prepared for that. In terms of the requirement for the visa, there's also funding that needs to be put into your Portuguese bank account. Again, the amount varies every year, but for this year, it's at least 10,440 euro for a single applicant. I think one of the things I also want to highlight is that local banking customer service and timeliness can be surprising to American clients who I think are used to filling out a form online and then being able to have their bank account open for them within a couple of days. So it's the banking system is modern, but it is bureaucratic, and relationship-based banking is expected. And customer service can be slower than you might expect. There's also really a real focus on making sure that all of your documents are in order and that every step in the process is followed to the T. So it's very specific about making sure we have everything we need on the bank side to get that account open. But it's also, opening this account is not only essential for the visa, it is immensely useful for paying rent, setting up direct debit for your utilities and other local expenses, also having your local debit and credit card. And then finally, in terms of topic, I wanted to talk a little bit more about how to find a home in Portugal and just some tips and things to be aware of as you go into the process, whether you want to rent or you want to buy. So when you're thinking about what to look forward to, what to be aware of if you want to rent a home, there are competitive markets, especially in the top most popular areas for Americans moving to the country. So we're talking about Lisbon, Cascais, Porto, the Algarve, places where you want to be able to act quickly if you see a listing that you like, and then put in a proposal quickly to get the place that you love. There is also a requirement upfront, typically, most often, for several months of payment in advance, which is not always what our American clients expect. So, maybe 2 months as a deposit most commonly, plus perhaps 2 months of rent paid up front when you sign the lease. When it comes to reaching out to listings online, we really recommend working with trusted agents or having someone who can go to the property and check it out and check all the paperwork, getting your lease reviewed by a lawyer. In terms of top listing sites where to look for these properties. There isn't a centralized MLS in Portugal. Probably the largest listing site is idealista.pt. And I'll show you, a couple of examples of the types of listings you might find in a second. When it comes to what you are going to need for your visa application, if you want to rent rather than buy at first, you do need both a signed and a registered lease for that visa. So a full legal contract, and it needs to be for at least 12 months if you're applying from the United States. But all of this aside, let's look at some types of properties and what you can get in Portugal. So of course, it's a country with a lot of options for you. And when it comes to properties you can rent, we have everything from a 1-bedroom apartment and maybe, one of the trendiest neighborhoods in Porto for 1,250 per month to a beautiful large 5-bedroom villa in Cascais, again, a very desirable area for over 6,000 euro per month, and everything in between. So whatever kind of climate, size, furnished, unfurnished you're looking for, there would be options for you. And then for buying, so some great news on this front. There are not restrictions for foreigners buying property in Portugal, and in fact, mortgages are available. So of course, recommending to anyone who's interested in this to get started with your mortgage first, talk to a mortgage broker early to understand what that would look like for you. But that is an option. The number one piece of advice I have for people interested in buying property in Portugal is hiring a good real estate lawyer. It is absolutely essential to check on all the registrations, all of the paperwork, to make sure that all is in order and as it should be, because it is the type of market that is more buyer beware. So you need to be on top of everything with the property before you purchase. You need to understand what comes along with the property. Again, there is no MLS system. The largest listing site is Idealista. And there are also a lot of real estate companies that maintain their own listings. So places like Keller Williams or Remax or Century 21 are all great places to start looking for properties. But in addition, it's great to have a buyer's agent who's very aware of your particular market where you want to buy as a foreigner coming in. There's nothing like that local expertise. To make sure that you're getting a good deal and a great property for the area. And again, you can get just about anything that you might want in Portugal. There's lots of variety in properties, everything from what I would say is maybe the most desirable neighborhood in Lisbon for expats, Estrela, a beautiful apartment for, just over 800,000 euro to newly constructed apartments with a view into Vera for about 400,000. And I know, just about running out of time. So I just wanted to mention really quickly, if you're interested in an expert team to manage all these aspects of your move plus much more, please reach out. We'll keep your entire move running smoothly before and after you land. And you can sign up for a free 15-minute consultation on our website. And now I'm going to hand it over to Shane, I believe.
Thank you. Let me share my screen here. There we go. So I'm Shane Clark. I'm the president of Euro American Financial Advisors. We are a cross-border investment advisory firm headquartered in Sevilla in Spain, where it is a little cooler than usual, but very hot in the summer. And we also have a sister firm in San Francisco called International Asset Management, which has been helping U.S. expats, I think, over 22 years now. So between the two firms, we do portfolio management, cross-border investment advice, and financial planning. Without further delay, let me get started. So I want to talk a little bit about, why is it so complicated for you with regard to your finances being a U.S. expat. And a lot of it is built around really two things. The first one is citizenship-based taxation. The U.S. is one of the only countries in the world that has citizenship-based taxation. And that means that because you're born a U.S. citizen, regardless of where you live in the world, you need to file a tax return in the U.S., even if you are no longer a U.S. resident. Most countries have residency-based taxation. So if you're from the UK, you live in the UK, you move to Portugal, you're only going to be paying taxes in Portugal. Excuse me, not the UK. So that's a bit of a difference. The other big difference is, the other big issue, I should say, is FATCA, the Foreign Account Tax Compliance Act. This came around 2010, and this essentially says that any financial institutions need to communicate your account information to corresponding tax authorities. So if you're a US citizen, you move to Portugal, you open an investment account, bank account in Portugal, those Portuguese financial institutions need to send that information back to the US IRS and vice versa. And this created a lot of problems for US expats. For example, companies like Morgan Stanley, Fidelity, Merrill Lynch, these companies have such a small percentage of their clientele who are US expats, they don't want to do the additional compliance work to meet FATCA requirements, so they have stopped working with US expats. So oftentimes when you receive maybe an email, when you told your broker that you're moving abroad, they said, hey, we can't work with you anymore. This is why. FBAR, I think Vincenzo will talk about it at length. PFICs probably as well, but PFICs are passive foreign investment companies. And what this is once you move abroad, if you go to a bank or a broker and you want to buy local funds, mutual funds, exchange traded funds, these create a problem for your US taxes. These are called PFICs. You don't want to buy them. They're very costly. There are a lot of additional tax reporting, and there's really no reason to do it. You can buy a better product at a lower cost in the US. MiFID is the Market in Financial Instruments Directive. MiFID's probably more important to me than to you all, but it is what governs financial institutions in Europe. There's been MiFID 1, MiFID 2, MiFID 3 is probably coming out next year now. We'll see. But this is something that I think is very important for US citizens when they move abroad. You want to work with an advisor who's licensed in the EU, in addition to the US. For example, in the US, you wouldn't work with somebody who's not licensed with the Securities and Exchange Commission or in the state that they're advising in. It's the same thing over here. You want to make sure that your advisor is licensed and they know what they're doing. And the last one is PRIPS, Packaged Retail Investment and Insurance-Based Products. It's always a mouthful to say that. And this is maybe if you've done some research looking online about buying US exchange traded funds abroad, this is why typically you can't buy them. So PRIPS is a piece of legislation that says any funds being offered to EU residents need to produce a key information document. And this key information document, part of it forecasts performance. Now, in the US, the Securities and Exchange Commission says you can't do that. You can't forecast performance. So they make it so the US exchange traded funds can't be sold in the EU. Now, there's a bit of a workaround I'll talk about later, but that's one of the chief reasons why you can't buy these US ETFs. So what is it that we do? We offer cross-border investment advice. We structure your investment portfolio in a way that optimizes your taxes, both in Portugal and the US, and we maximize your return given your level of risk. Importantly, I should say, we also coordinate with your financial team. So paying taxes in Portugal, filing a return in the US, it's very important to make sure that all us and both of those two parties are communicating, making sure that everything is done in coordination to be optimized. And we're able to do this because we've been doing it for a number of years. We've seen lots of different cases over the years, and we have, knowledge that maybe you don't have, or that we think when you're speaking to your Portuguese tax advisor, you should mention if you've told us before. And I think that's quite important. The other service we offer is financial planning, which I'll talk about in a minute. So just in summary, I think when you move across the border, you need to have someone who's licensed in the EU to provide cross-border investment advice. We're licensed in Spain with the Spanish investment authorities, and we can passport our license to 10 other countries in Europe, which is mostly Western Europe and Greece. And we have designations on both sides. So I have the European Financial Planning designation. My partner, Tom Zackestel, is a certified financial planner in the US. We're both expats. And like I said, we have clients in most countries in Europe. So we've seen lots of different situations over the years, especially in Portugal. Something that we do that I think is also very important is an expat checklist. So oftentimes when I have early conversations with prospects or clients, they ask, is there anything I'm forgetting? And the answer is always yes. So something we do is we go through this issues before you move, issues just after you move, and then ongoing things that we need to address down the line. Something like estate planning or long-term life insurance, long-term care, these types of issues. So we go through, this is not an exhaustive list, but we go through a list like this with you when you first come on board to make sure that you're not missing something that could adversely affect you down the line. So if we're looking at kind of top financial issues for expats, financial planning, I think, is very important if you look at pre-move and then also post-move. So a financial plan, what we do is there's a financial numbers part of it and a non-numbers part of it. And what we do on the numbers side is we create 3 personalized financial statements. So a balance sheet, look at your total assets, an income statement, looking at how much money's coming in versus your expenses, and that's liable to change after you move. And then we also look at a statement of cash flow. So when this money is coming in throughout the year, maybe pension, maybe Social Security, maybe brokerage account income. We take that, we project it all into the future, and we incorporate any goals you might have. Maybe you're looking at, should I rent a property or should I buy a property? Maybe you want to fund grandkids' education accounts, anything like that we can include in the financial plan. And it helps us, determine how you should be investing your investment accounts. So maybe you think that you should be quite aggressive, but we look at your assets, we look at your expenses, we think maybe we should be more conservative. So it's good information for both parties. Custody, this is what I talked about before, looking at FATCA, why a lot of US brokers and custodians can no longer work with you. So that's a big question for expats. Who can you work with? So we have a partnership with our US firm with 2 different custodians, Charles Schwab and Interactive Brokers. There's benefits to both. Charles Schwab, if you work with a US-based registered investment advisor, you're considered an institutional client. If you're an institutional client, you get better treatment. One of the benefits is you can buy US exchange traded funds. So it's a nice way to get diversification. Interactive brokers, you can hold multi-currency accounts. So for reasons I won't get into, a lot of people right now are talking about moving their money out of the US. One option is Interactive Brokers in Ireland. Now, there's lots of complications if you do that, but one of the benefits is your money's outside the US financial system, and we can put together a portfolio of European stocks, European bonds. If we're looking at a fee comparison, if you were to custody your assets at a Portuguese bank, the fees are typically much higher than if you use a US custodian. We also need to look at, financial system diversification. So if you are concerned about the US system right now, the US dollar, there's lots of considerations and lots of elements that are both beneficial and detrimental that we need to take into account. Tax reporting is one of them. So oftentimes, if you custody outside the US, you don't get tax year segmented reporting. You don't get 1099s on brokerage accounts. And that creates a complication when you file your US returns. So if you're a non-resident of Portugal, for example, you're only paying taxes in the US, you have your assets offshore. If you don't have a 1099, you're likely going to be paying ordinary income on any gains instead of long-term capital gains. And this is, something we come across frequently. Also, safety. So the US accounts have SIPC insurance. That's up to 500,000 per account. If you custody with Interactive Brokers in Ireland, for example, the insurance only goes to 22,000 euros per account. You don't have the IRS reporting forms. And if you get audited, that's another reason why it's quite beneficial to have these forms. And briefly, I'll talk about currency swings. Currency risk is essentially if all of your money is in US dollars, all of your expenses are in euros, that's a risk that we need to account for. So we have a couple different ways we can do that, either directly holding euros or indirectly holding funds in the US that have exposure to the euro. So what we recommend is investing in a multi-currency, kind of globally diversified portfolio and achieving that in a number of different ways. I'm running out of time, so I'm speeding up here. So again, looking at the different things that you can control fees, you can control diversification, which is how you control risk. And we always recommend looking at those, looking at tax management and controlling those, building a long-term strategy, sticking to it. Briefly on real estate, if you're looking at investing in a property, you need to decide if that's an investment property or if that's a home. And those are two different things. If it's an investment property, we need to look at that like any other investment. So we need to consider the cost of capital, the yield, liquidity, lots of different issues like we'd look at anything else. Always use a lawyer. And that's my presentation. I think if you have any other questions, you can reach out to me personally. My email address is there, and we have lots more information on our website. Thank you. I will pass it over now to Vincenzo, I believe, right?
Yes, thank you. Let's do this. All right. I'll also try to sort of go through this quickly because I know we want to leave time for questions and there's a lot. So I think when you look at being a U.S. expat, there's generally two, called strategies and concepts that are important that we'll go over today. The foreign earned income exclusion and then the foreign tax credit. We'll touch a little bit on some business structuring and then also a little bit on the tax treaty. But I think the biggest thing is, as a U.S. citizen or green card holder, regardless of where you live, you do have to file your U.S. expat taxes, right? And so you could see the thresholds, $14,000 for single, 29,000 for married filing jointly, and then if you are married filing separately, it's down to $5. So obviously a big difference there. I think the biggest thing is filing state taxes, right? And I'll go into on the next slide, but I think a lot of people, do think about, well, where can I save tax? Especially somebody who's a pensioner, if you will. Probably one of the biggest tax savings you could achieve, especially if you're in a sticky or a high tax state. California, New York, Virginia, Massachusetts, Illinois are particularly sticky, meaning they're rather aggressive when it comes to state residency. So it really is about moving to a state with no income tax. Of course, what does moving mean? One that's actually moving to Portugal, you want to make sure that any sort of address, any tax document, whether it's a social security statement, brokerage account, whatever, does not arrive in, let's say, a state like California, because then it will be flagged. You'll get a nasty letter from California and have to address that accordingly by showing the fact that you've cut ties with California. Now, what does that mean? That literally means, changing your driver's license, your voter registration. If you have any other sort of licensing, like a real estate license, like a brokerage right license, moving that or giving that up. Giving up any sort of car, right? We see sometimes like the motor vehicle registration. Um, and yeah, fully cutting ties. Of course, if you still have your home there, you'd either want to sell it or rent it out full time. So any sort of way to show that you have moved your belongings to Portugal or wherever would be important to get out of state tax. And again, it really does matter per state, but just sort of high level want to go through that. A couple just important things I think, I see keeping stateside. Of course, it's important to get, potentially like a local bank account and whatnot, but I do feel that the thing that I see the most is people give up a US phone number, which can be slightly annoying for like two-factor authentication access for like a bank. etc. And then just having like a US address again for banking and brokerage purposes, or even just receiving mail from important institutions like the IRS. So I always recommend people to have some sort of US address, of course, in a tax-free state. And also sort of keeping their US phone number. And of course, you could have a local number as well. Now there's so many like dual SIM cell phones. So, all right, let's get down to the tax breaks. So, as I mentioned, there are two. One is known as the foreign earned income exclusion. And the foreign earned income exclusion allows you to earn up to $130,000, 130,500 to be exact, of tax-free income. And I think the important thing is it needs to be earned. So it's income that you earn from physically working, whether you're working for a US company still remotely, whether you have your own business or have a foreign business, um, you can earn and not pay US income tax on that first 130,000. Of course, it doesn't apply to any passive income like real estate, pension, social security, et cetera. It does have to be earned income. And in order to qualify, there are two tests, the bona fide residence test and the physical presence test. Um, Again, just to be super clear on this income for the foreign earned income exclusion is for income that you're performing services for. So again, any sort of passive income, capital gains, dividends, interest, pension, rental income, this does not count. It does have to be earned income, and as long as you're physically performing the services outside the US, it counts, even if it comes from a US source into a US bank account, etc. So it's a either or test, right? You don't have to qualify for both the bona fide and the physical presence. I think because most of the people here are looking to move to Portugal, I do feel that the bona fide residence test is probably the most applicable, right? Because you have to show that you are physically living in another country, right? And you have said situational factors that show it, right? So again, having a visa, having a local bank account, potentially filing a tax return, obviously having a long-term lease or owning a home there, social, cultural ties, things like having a gym membership or a library card, having your belongings there, having, doctors and local health care, et cetera. And so by showing these, and this is not a bright line test, it's not like you need XYZ document, but if you ever get audited for the IRS, you want to be able to have all these things to show that you're living outside the US. And you still have to be outside the US for, I would call it 9, 10 months out of the year. So in other words, you have the ability to be in the US for 60, 90 days. Of course, all the time that you spent working in the United States would still be taxable. But again, this is the factors for qualify for bona fide residency. The other test is the physical presence test. Now, again, it's either or. So if you don't have all those factors previously and you're more of a nomadic person, maybe you're doing Portugal for a few months, but then you're going to go to Spain and Italy, whatever, then this would be the test for you to qualify, which really is very bright line. You can only spend 35 days in the United States. You have to spend 330 days outside the US. So, of course, that means that you really do have to count your days and be very cognizant of how many days you're in the US if you're going to get this $130,000 exclusion. Now, any sort of travel day, or even if you're a partial day in the US connecting to an airport, counts as one of those 35 days. So, the foreign tax credit is essentially a dollar for dollar credit for taxes paid, right? So let's say you move to Portugal and you invest in real estate or have interest or a brokerage account, whatever, and Portugal essentially might tax that income first, you will be able to receive a dollar for dollar credit on any Portuguese tax. So essentially, in a lot of these situations where you're living in a foreign country, subject to any sort of specific tax treaty exemptions, you pay, in this case, Portugal first, and then you get the foreign tax credit in the United States. And there might be situations where you just take the full foreign tax credit. You don't take the foreign earned income exclusion because the taxes are higher. Yeah, and it might be better. So it's always sort of good to do an analysis to see what would be better, the foreign tax credit or the foreign earned income exclusion, or potentially a combination of both. Like if you're making over 130 grand, maybe anything over that, you take the FTC. So the foreign housing exclusion essentially is a way to add to the 130 foreign earned income exclusion. So if you're paying rent that's over roughly $20,000 annually, anything over that amount would qualify. So if you're paying $25,000 annually, you get the 130K foreign earned income exclusion. And then, that 25,000 is obviously $5,000 over the 20K floor. And so you'd be like essentially 135. So it just adds to the foreign earned income exclusion. And this could be rent, utilities, repairs, residential parking, etc. Just to hop a little bit into the U.S. Portugal's tax treaty, a lot of people ask about retirement or pension plans. Again, this is first tax in Portugal, then the FTC applied to the United States. Business income is, I think, a little more tricky. There's things about permanent establishment in the US, but otherwise, I would assume that it applies. It would be taxed in Portugal. I think the devil's in the details, so to speak, about structuring for business. People that have their own business, whether it's the U.S., Portugal, virtual. So I think there's a lot of nuances there. And then I think the biggest thing is Social Security, due to the tax treaty, is taxed at where it's coming from. So in this case, it's only taxed in the United States. The other nice thing about the U.S.-Portugal relationship is they have a tax treaty for the actual taxes, and then they have a totalization agreement, which essentially is a treaty for Social Security contributions, and essentially it does eliminate the potential for double taxation there. Just to follow up on what Shane said previously, PFICs, you definitely want to avoid them, which essentially are foreign mutual funds. So I think the one thing I do see, particular to Portugal, some of these investment funds could be considered for the golden visa, this 500 grand that you would invest, could potentially be PFICs. A lot of times, said investment funds have enough American clients that they've done special elections, this QEF election or another check the box election, to essentially mitigate the high taxation of PFICs. But it's definitely something to ask as you vet certain funds. What elections have you done, or for your U.S. Investors in the fund. Foreign bank account reporting again. If you have over $10,000 in a foreign bank account, you do have to report it. It's in aggregate. So let's say you have two accounts. One's the max balance is $5,000. The other one, the max balance is $6,000. Again, in aggregate, that's $11,000. So you have to report both. There's also another form for the 8938, which is for foreign asset reporting. Again, as you could see, the level's a lot higher, around 200,000 for single, 400,000 for married. And again, this is not just bank accounts, but any other sort of pension funds, mutual funds, and investment in one of these funds for the golden visa. These are all foreign financial assets that need to be reported on Form 8938. What's not reportable would be if you have foreign real estate in your own name, that would not be reportable under 8938. So, and then finally, a lot of people who are moving to Portugal are self-employed. And so a lot of times, we generally recommend the S Corp for Americans when they're in the States. However, I know that there are some considerations for being an S Corp or even being an LLC disregard entity. I'm sure Marta will comment a little bit on that. But like I said, I think everything is, very specific to one's situation. But I just want to bring this to people's attention. If they have an S Corp and they're thinking about moving to Portugal, that might not be the best structure. And I think this is part of the planning side of moving. So here's a QR code for anyone that wants to have a consultation with us. I will pass it over to Marta. Thank you.
Well, thank you, Vincenzo. And thank you all. Let me just share my presentation with all of you. Okay, here we go. Well, first of all, let me thank your American financial advisors for the kind invitation and to share the panel with my fellow speakers. I'm very pleased with that. Well, Portugal has become in the last few years a very interesting jurisdiction for US citizens. And actually, according to the official Portuguese immigration data, we had in 2024 20,959 US citizens registered in the country. And actually, they represent like 21.2% actually of the digital nomad visa applications that Anna spoke about in the beginning, which shows an exponential increase for a visa residence permits reliant on remote work and digital nomad. There's also a very strong interest in the Portuguese real estate market from US citizens and Portuguese venture capital and private equity industry. And that is partially due to the Golden Visa program that Anna spoke a little bit about. And also the subsequent access to the Portuguese citizenship. Why Portugal? That's the main question. And the main reasons for it are actually security, safety. The country is a very safe country. And the accessibility to the healthcare system in Portugal. And also we're top ranked in the best quality of life country for expats. We're a very peaceful country. We have political stability. We have a lot of sunshine, good weather, good food. The cost of living is very affordable. We have a very strong cultural offering. We have a worldwide network of partners and double tax treaties with worldwide jurisdictions. We allow for access to European market by having a visa or a residence permit in place. We're very proficient in English, and we are top ranked in university education. So those are a couple of factors to consider, and we know that they are in the thoughts of the US citizens planning on relocating to Portugal. And we have seen a huge increase of demand for information regarding Portuguese key tax considerations and legal considerations to basically relocate to Portugal. There are a couple of things that we need to consider. You need to know the basics when you decide to take a decision to relocate to Portugal. One of the basics is, how do I become a tax resident of Portugal? And we have two legal alternative criteria to do that. So you become a tax resident if you stay here more than 183 days in any 12-month period, or you spend less than that and you have an habitual abode in Portugal with the intention of using it as your primary residence. Portugal has a concept of a fraction tax year. So our tax year does not necessarily need to match the calendar year or the civil year. So if you're planning on relocating to Portugal, you can relocate at any point in time in the year, and your tax resident will kickstart as of the moment you spend your first overnight stay in Portugal, okay? And the habitual abode criteria does not necessarily mean that you need to acquire a property to establish the tax resident. You can have a lease agreement, you can have a usufruct agreement, a free lease agreement, any kind of legal title that will allow you to basically have use of a property in Portugal to qualify for this alternative criteria of the habitual abode. So provided you meet one of those, you will become a tax resident of Portugal. The process is quite straightforward, so to say. Of course, that we need to consider timings of the visa and permit applications on top of that, but you need basically to get a Portuguese tax identification number in Portugal. That will be your primary step It will be a taxpayer number as non-tax resident of Portugal. Okay, it's just to register you before the tax authorities, because you will need that number, 1, to secure the visa application, and 2, to open the bank account, and 3, to secure an accommodation in Portugal. So the second step would be to obtain the visa or permit, considering your personal situation, of course, and then I explain a little bit what the options were. You need to secure an accommodation in Portugal as well. It can be an acquired property or a rented property. And once you have everything in place and you have the visa application approved and the visa issued on your passport, you can then communicate to the tax authorities in Portugal that you have effectively become a tax resident of the country. Before that time, it will be quite tricky to register or update the address that is indicated on your Portuguese tax identification number to Portugal. Without the visa at least stamped on your passport, the tax authorities in Portugal tend not to accept any kind of registration as tax residents here. So that will be a primary step. Then afterwards, you can decide, depending on your personal circumstances, if you want to live in Portugal under the standard tax regime applicable to any kind of Portuguese citizen, as myself, or if you are eligible and you qualify for any special tax regime that we may have. We no longer have the NHR, which was very popular in its time, but we do have another special tax regime that for specific cases may potentially be applicable. Some key topics on moving and living in Portugal that is worth your knowledge. One is that we don't have wealth tax in Portugal, and we don't have asset reporting obligations. There are 2 exceptions to this. One is you need to disclose your foreign bank accounts, not the overall balance of the accounts, but only the IBAN and BIC SWIFT of the same, provided you are the holder, beneficiary, or authorized signator of those accounts. A recently introduced compliance obligation was to report assets that are held or registered in blacklisted jurisdiction for Portuguese tax purposes. We have 83 listed, blacklisted, or tax havens jurisdictions in Portugal. So it's quite a substantial list, and it should be consulted with your tax or legal advisor to see if you qualify for any of those assets, because those would need to be reported in your annual income tax return in Portugal. And by reporting those, you will be reporting the value, for instance, of a bank account that you hold in HSBC, Jersey, expat account, for instance. You will have to declare the balance as of the end of the fiscal year in your tax return in Portugal. Apart from this, another key factor of Portugal that is very attractive is that actually we don't have inheritance and gift tax, meaning that we only have it if the assets that you are transferring by means of inheritance or gifts are located in Portugal. If they are all outside of Portugal, even though you're a tax resident of the country, it will not, any transfers of those assets will not be caught by the inheritance and gift tax rules. If the assets are in Portugal, then you will have a 10% stamp duty on it, although there is an exemption in our law that is applicable to any kind of transfer made to spouses, ascendants, or descendants. The only exception to this is that if you are donating a property, a real estate property in Portugal, you will always have to pay 0.8% over the property tax value, and this is not caught by the stamp duty exemption. Another thing is that we don't have exit tax for individual taxpayers. So if you're planning to relocate to Portugal and then shift back your residence to the US or to any other country, you won't be taxed on exit. There's an exception to this if what is at stake is a tax neutral transaction. Usually we don't see this in US citizens or in US taxpayers. Regarding a special tax regime, we have a new one. It's called Tax Incentive for Scientific Research and Innovation. It's quite good in terms of tax incentives. It allows for a 20% flat rate for Portuguese source employment and self-employment income, provided that that income derives from specific activities and specific entities that are foreseen under the regime. And it provides for a complete exemption on foreign source income of whatever kind, except for pension income and income from blacklisted jurisdictions. Although it is very good in terms of tax and incentives, it is more restrictive in terms of eligibility, because it entails that you need to have a Portuguese source employment or self-employment income from specific eligible activities. Without that, you do not qualify for access to this special tax regime. The eligible activities are very broad. They caught startups, technological companies, holding companies, the fund industry, and it needs a case-by-case analysis to see if you qualify or not to access this special tax regime, because if you do, then it's applicable to you for a 10-year period, non-extendable. Of course, that if you do not qualify for this, you will be caught by the standard tax regime in Portugal. And basically everything that relates to employment, self-employment, immovable property gains, or short-term security gains and pensions will be taxed at progressive rates, and that can vary between 13% up to 48%. There's also an additional solidarity tax that can go up to a maximum of 5% that may potentially apply. So ultimately, we will be talking about a higher rate of 53% in the worst case scenario. For investment income, rental income, and long-term security gains, then this is taxed at flat rates, generally 28%. It can be increased to 35% if it derives from blacklisted jurisdictions. Another thing that you should bear in mind when living in Portugal or moving to is if you buy or if you rent a property, as Anna said in the beginning, and there's an applicable tax framework to that. It differs if you're buying or if you're renting. Usually renting is cheaper because it doesn't fall on your responsibility, the payment of taxes on property and on transfer tax. If you're buying, you will have a real estate transfer tax and a stamp duty that is usually applicable on the highest of the taxable property value or the purchase price, and you will have an annual real estate tax that you will have to pay due to the holding of the property, which can be increased by an additional annual real estate tax depending on the overall property tax value of the real estate assets that you have in Portugal. To finalize, some practical considerations that I think you should take into account, because the devil is in the details, as Vincenzo said, and we have some pitfalls when moving or relocating to Portugal. So my first advice would be do a pre-assessment of your assets, of your income streams, of your corporate structures before deciding to relocate. There may be a need to restructure something that would put you in a most tax efficient situation in legal situation. So that is key for me as a qualified tax lawyer in Portugal. The other thing is US tax is based on citizenship, as Shane commented, and this creates a mismatch with the tax system in Portugal. We taxed based on residency, so basically tax residents in Portugal are obliged to declare worldwide income from US source, Portuguese source, and worldwide. So you will have to report, you will be liable to taxation. Of course, that, thank God we have a double tax treaty with the US, and that we can rely on those provisions, and especially on the foreign tax credit, to basically mitigate or eliminate this exposure to a potential situation of double taxation. Another thing that is key for US citizens is the timing for filing obligations in Portugal. In Portugal, you have until 30th of June of the year following the one you are reporting the income to basically file your tax return. Of course, that sometimes what happens with US citizens is that you don't have K1s in place by that time, you don't have all the information required to report in Portugal, and therefore we have a possibility to extend the Portuguese legal deadline to file the annual tax return up until the end of each year, to secure that you have all the information in place and not only estimates, to basically report accurately all the information and your relevant income. Two other things that are very, very important. One is the LLC and the trust structures. They are very common with US citizens relocating to Portugal, as we all know, and special care should be taken when we're looking at this. And for three main reasons. One, Portugal does not recognize trusts. We're a civil law jurisdiction, so we don't recognize trusts as legal entities, but we do have specific tax rules applicable to distributions made from trusts. So we need to be careful if you're planning to relocate to Portugal, if you intend or not to proceed with distributions regularly from the trusts, because this may be caught by taxation in Portugal, although we have arguments to sustain that they will probably be taxed in the US, and we can mitigate the exposure, of course, of this taxation on those distributions. Another thing would be the applicability of the control foreign company rules in Portugal to these type of structures. And for trusts, we usually mitigate this exposure by ensuring that the trusts are discretionary and irrevocable, because that will give us room to sustain that the settlor and the beneficiary don't have necessarily the powers to control the underlying assets of the trust, and that lies in the hands of the trustees itself or themselves. So this is something that we should consider also. Regarding LLCs, I agree with Vincenzo. If you elect for the S corporation, that gives a little bit more of sustainability to the tax framework applicable in Portugal, because then we could qualify that as a corporation itself in terms of taxes, and avoiding the potential application of fiscal transparency rules to the LLC, which means that we could treat any kind of income allocated to the LLC as a potential investment income distribution, which would be taxed at a flat rate in Portugal. But this is something that you need to consider before relocating. One final note regarding inheritance law in Portugal. If you decide to live here, you will be caught by the Portuguese inheritance law, which foresees forced heirship system. And this will apply, of course, if the Portuguese law is the one that governs your affairs at the time of that, or at the time you make a will, regardless of where your assets are physically located. You can avoid being caught by these forced heirship rules if you decide to choose to apply the law of your nationality. So the US law, or any other law if you have other types of citizenships also. And this needs to be done before a notary in Portugal. We definitely recommend for US citizens to do this, especially if you have trust structures, because the forced heirship rules take precedence in succession matters over the rules of the trust. So ultimately, this can limit the assets that can be freely distributed through a trust. So we definitely recommend this to be done. And this is it. Thank you for your attention. Feel free to reach out if you need any legal or tax advice in Portugal. My email is right there, and I'm happy to discuss your specifics of your situation. So thank you.